Right. Hello and welcome to another Expert Inside interview. My name is John Golden from Sales Pop, online sales magazine and Pipeliner CRM, joining you as usual from a sunny San Diego. And today I'm delighted to be joined from the other coast from Kevin Gwynn White, who is in Brooklyn, New York. How are you doing, Kevin?
Good. Not as sunny as San Diego, but still good.
Yeah.
Thanks for having me, John.
Actually, I to be honest, I just lied there blatantly because it's cloudy right now. But there you go. I'm just so used to
Well,
saying
okay, well,
sunny.
likewise.
And Kevin co-founded Expo Group in 2017. He has helped to provide finance, operations, and strategy support for growth stage companies and M&A diligence to support fund managers. You focus on bridging the gap between investors and founders, help CEOs build premier finance functions to appeal to investors, and you focus on education, software, e-commerce.
That's
Ah,
right. You nailed it.
excellent. And you've an MBA from Columbia and a bunch of other. You got so many degrees. It would take me the whole podcast to read them all out.
Enough to make me dangerous to finance. That's true. Yeah.
Exactly, yeah. So just before we get into what you do with Expo and why you set that up, just to kind of give me an overview of what's the for early stage or Series A uh, companies right now. What's the VC landscape looking like?
Yeah, it's probably not a surprise to most people, but it's still pretty tough landscape in VC. There was obviously a ton of VC investment that was happening through 2021, but sort of after the pandemic had closed, um, a lot of the VC dried up. That being said, there's still a really robust ecosystem, right? So it's just there was. If you think back to 2021,
Hmm.
I think back then it felt like a free money giveaway. Like
Yep.
anyone who get the phone with you, you'd be able to get money from. And now there's just a much. I think that to the extent that is still somewhat happening with companies that are trying to be AI forward, and in my opinion, creating a bit of an AI bubble there.
Right.
But sort of in the rest of the seed stage and sort of venture landscape. There is still a robust ecosystem in VC, but you really have to prove to investors that you have a clear path to profitability
Yeah.
from very early on. That never used to be a thing that you had to worry about 4 years ago. It was just growth, growth, growth. No one
Yeah.
even talked about what was your free cash flow inflection point. Now you really have to demonstrate, within a couple years after the seed investment, how can you keep things tight, and how can you pretty quickly get to a viable company, which is doable in a lot of
Yeah.
cases. But yeah, what they're asking has changed. So if the money's available, I'd say that fundraising takes longer. But absolutely, there's still a VC ecosystem that's alive and
Yeah.
well.
Well, it's a great object lesson, isn't it? The since COVID and the change, as you said, the free money bonanza, the VCs just preaching top line growth. I don't care, just growth, growth, growth,
Right.
and then suddenly flipping to. And in fact, to be honest, back then when whenever we talked to investors from Piper, because we always focused on the fundamentals of the business and actually being self-sustaining and profitable, we were kind of looked down on and sort of like, okay, well, that's a very old-fashioned view. Now we're in vogue, so it's
That's
one of
right.
those things. If you hang around long enough, you'll come back into fashion.
That's right. Yeah, yeah, yeah. I guess any strategy, if you can survive long enough, will come back around. But certainly, we're in sort of that, focus on sort of profitability and lean operation stage.
Mm, yeah.
But yeah, I think a
So,
lot of people get discouraged. But what I would say is, the fundraising is still there for sure.
yeah. So, would you advise any early stage or startup businesses that to really work on, being as lean, being as operationally efficient as possible, being, setting your business up from the start to make it look like you know what you're doing and you can actually be profitable when investment comes.
Yeah, I mean, the best advice I think you can give in this market in general is, focus on your burn multiple and do a lot with a little. But
Mhm.
especially in the early stage side, if you can just show traction with a leaner team, that's really enticing, right? I
Yeah.
think there was a world in the super early era, or at least for of my time, back in social media and sort of the early 2010s, where you didn't even have to have revenue yet. It was just like you could show anything. You have an idea, you have a concept, you get venture capital. We've sort of come way back full circle from that. And people like to see, that not just do you have an idea, but do you have significant traction? So if you have 2 or 3 employees, were you able to generate any revenue from a minimum viable product? And if you are able to do that, you are able to get there and show, hey, look, like, we were able to, even if you were to, in the very early stages, get $500,000 in revenue from
Mhm.
just this basic team, that's a proof of concept for a lot
Yeah.
of folks, right? And then if you can scale from there, great. But absolutely doing a lot with little is the name of the game now.
Yeah, yeah. I'm being a little older than you, Kevin, and my introduction to the US was the dot-com era in Silicon Valley in the mid late '90s. It's funny back then. Again, that was another one of those cycles where people were getting money from a PowerPoint presentation and saying,
That's right.
here's what we're thinking of doing," and it came around again, obviously with the social media and stuff. And but I think that's a great piece of advice, that if you can do proof of concept, if you can make some revenue with the small team, very focused, I think you become quite attractive, because obviously the bar has been set a little higher now, uh, and it's going to be that way for a little bit, I think. So the more you can prove your scalability, and because at the end of the day, somebody wants to be able to easily look and sort of say, I can see a predictive path here.
Absolutely. And one thing I will say, and a lot of folks, I think, with the sort of West Coast venture mentality, will always think, okay, I just need to, I need to scale my team and sort of get
Yeah.
as much revenue early as I can to show just baseline growth in the concept. I have also seen a lot of interest from a totally different class of investors. If you can bootstrap a software company, a lot of people say it's impossible, but let's say that you have a CTO as one of the sort of co-founders, and they're able to sort of build a lot of it.
Mhm.
We've seen a lot of software companies that might have, $2-3 million of revenue, so still very small companies, but they're able to just even get to break even on their team. We've
Yep.
seen that a couple times. Even at that stage, you start to uh, really focus more on growth equity investors. And most people think, well, growth equity, that's actually a lot later than venture capital. It's Series D, E.
Mhm.
If you can get to cash flow break even,
Yeah.
even if you're small, a whole different world opens up for you beyond VC, where people will start to actually ask questions and potentially use platforms. We know a bunch of Midwestern funds
Mhm.
specifically that focus on smaller scale software companies. And when I say smaller scale, $3-4 million of revenue, that will buy them up and actually use them as a platform and acquire other companies and roll into them,
Right.
even at that stage, just because they're cash flow break even. And so that just shows you, you can go pretty far if you are able to remain tight and sort of get to that point.
Yeah, yeah. So it's another great lesson in the business fundamentals. If you can really focus on them, and you can, you're that's a great step forward, and that's what resonates in the market today. But yeah, it is really interesting. It is really interesting when those other forms of investment open up, because let's say VCs don't suit everybody, and sometimes maybe a growth equity company is a better fit for them.
Yeah, it's right. And those companies, if you're still cash flow negative and you're burning a bunch of money, that world really isn't available to you yet. And so, totally agree with you that's also a very sort of different proposition depending upon the growth equity investor. Maybe they want a control interest, or they would maybe want to take much more of the cap table than a traditional VC would. But that, this whole new sort of set of resources opens up to you. And
Mhm.
I'd always rather have more choices than less.
Yeah. So just switching gears slightly, but not completely, Kevin, tell us a little bit about the concept behind Expo Group.
Yeah, sure. So, I a little bit of background myself. I worked at Ernst and Young, the accounting company, for a decade. I worked first in their capital market strategy group in consulting, and then in their transaction services group in M&A. And so, had a lot of experience on sort of the accounting finance side, working with larger clients there. But then at the end of my time there, started working for had done my MBA and started to work with a venture company, doing sort of the more deal sourcing, M&A type work. But pretty quickly had a lot of good relationships with a couple CEOs of the portcos, put my consulting hat back on, and started helping them sort of get over the sort of Series ABC hump, whatever it was, in their
Mhm.
fundraising. that worked really well. And the partners of the fund were very encouraging and said, hey, why don't you think about doing this? And so Expo Group was really born out of supporting the portcos of that company,
Right.
and that was back in 2018. We've grown a ton since then. Now we do transaction services. It's also my background, quality of earnings work for bigger PEs. We work with, and I would say that maybe 30% of our clients are VC now, and the rest are lower middle market PE or growth equity funds. We work with some very large funds too, like Goldman Sachs Asset Management,
Mhm.
or some of these bigger funds like Aqualine. But working with those funds to the extent that they're targeting lower middle market investments. So yeah, it's just grown organically. A boutique company now, we're 65 people, and really just focus on core outsourced CFO, controllership work,
Mhm.
transaction services work, and tax work. But through that, we get a very interesting lens into sort of what's happening in the growth equity VC ecosystem, what
Mhm.
investors are sort of looking for, how the market's moving, just from being really close to from our clients.
It's an incredible change, isn't it? I mean, and obviously this is why you've been able to grow your business, but it's been an incredible change the way it's become, much easier to leverage resource, like an outsourced CFO, like, these kind of resources that you wouldn't have once upon a time you wouldn't have been able to do, but now it allows, as we were talking earlier, it allows companies to look at what's core to their business and what they can outsource in a variable mode. It helps, it makes controlling your core expenditure so much easier when you can leverage fractional resources.
Huge. And it's interesting. If you look way back, you go back 30, 40 years, you talk about the beginning of the dot-com. I actually think we've seen this massive growth in the private equity ecosystem and venture ecosystem, and the ability to start a company is totally different now than it
Yeah.
was even 30 years ago. I mean, one, the funding what just wasn't there in the same way, right? It
Mhm.
just was really hard to go out and do fundraising, and now it's extremely available. Two, the other thing that I think led to this explosion in entrepreneurship in the US in the last 20 years is that, if you think about even how getting an accounting system in the
Yeah.
90s, you were paying a license up front for this huge software. And so there was this big fixed cost, and maybe you could finance it, but the barriers to starting a company were much higher. Now you go out and get QuickBooks Online, start a
Mhm.
company, you pay maybe $100 a month max, right? That you can all of a sudden really stretch out some of those
Mhm.
upfront barriers and costs. And also now it's the same thing with this amazing ecosystem of outsourced vendors, right? So
Yeah.
you can hire like Expo, and you have an entire very experienced finance and accounting function at your fingertips, where you might have to go hire a full-time FP&A person and then a separate full-time accountant, because those people are generally different
Mhm.
people. That's really expensive. Make them W-2s, health benefits, taxes, right? Like that's totally different. Now you can go find outsourced HR people, outsourced fractional accounting people, and pretty much set up an entire back end of a
Yeah.
company, and even have a strategic partner for much less expensive than you would have had to pay 30 years ago. So all those things together, the extra funding, the variable cost of software, the ability to go out and find outsourced vendors, I actually think, despite how we might feel that this market is at a certain moment in VC, is really a golden age of entrepreneurship. There's just so many resources that did not exist before.
Yeah, no, it's so true, and I think, and as you said, I think this is the golden age of entrepreneurs, and I think it's only going to get to even more so. I think COVID, kind of fired up a lot of people, and they went, "Now I need to go do something." Now the tools are there, as you said. I mean, once upon a time, I remember setting up my own businesses at one stage, and the amount of effort you had to go through. Now I could literally sit here this afternoon and set up a business and have phone numbers, have websites, have everything. And if I needed resources on Upwork, or I could, if my company was bigger, I could be using you. And before I know it, I have a top class finance department operating, and it's still just me here.
Exactly, exactly. It's just something that would have been very difficult to do in the past, but now there's the it sort of feeds on itself, right? The money was
Mhm.
there to support the entrepreneurs. There were more
Yeah.
companies, these vendors like Expo Group popped up to actually support that ecosystem. And now it's a very rich ecosystem where, for a relatively low cost, you can start and run a company, and with tremendous capability per dollar that you spend. And man, I can't even wait to see in the next 5 years how AI changes that even further. I think we're going to get to the point where, and it's been
Yeah.
talked about a bunch, where you might have 3 or 4 people to business that's tens of $1 million, hundreds of $1 million, who knows, in revenue, which is really a really cool place to be.
hmm And then and so just on you were saying earlier about fundamental businesses, like if you're being employed to do some due diligence on companies or whatever, I think that's part of one of the services you do. Um,
Oh, that's right. Yeah, yeah. We kind of work on both sides of the table, right?
mhm,
So on the sort of portco side, where we're actually contracting with the CEO or CFO,
yeah,
we're that sort of outsourced CFO or accountant team. And then on the fund side, we're doing quality of earnings, financial due diligence, tax due diligence. We're
mhm,
going in, we're actually helping look at the company from a financial perspective. Does it make sense of the numbers there that they say they are? It's powerful because it really helps us be good advisors on both sides. Because if we're
mhm,
doing the diligence when then one of our clients goes through one and they're asking all the questions, we kind of know what they're going to ask because we're the ones usually asking the questions the other side of the
right,
business, right? So
yeah.
it's powerful in terms of being able to be good advisors.
Yeah, what's some advice you give to a company if they're starting on this process, right? They're looking for funding. What should they make sure they have in place on their finances side? What are the common mistakes you see, or the common issues that maybe hold things back?
Yeah, so it depends on the stage. Obviously, I'd
Sure.
say I used to have a guest spot at a class that spoke at Columbia, and sort of had this slide that talked about sort of the different phases of company that you might be in.
Mhm.
Seed through sort of the
Yeah,
growth equity, through the sort of lower middle market PE, and the different investment, and where you'd be. And at the seed stage, the finance needs to be there, but is truly less important, right? So
yeah.
when I say seed stage, I mean if you're pre-revenue, or
Right, yeah, yeah.
you're less than $300,000, let's call it, in revenue.
Mhm.
Um, Now, my best advice to everybody is start the accounting as early as possible and get it right. Like that, trust me, you want to know what the scorecard looks like. But the truth is, the investors at that stage are going to be betting mostly on the entrepreneur, not
Yeah.
even the idea, right? Like the
Mhm.
idea is important. Most people think that that's what it is, but it's the team. My
Mhm.
experience in venture very much, it was focused on the team and the entrepreneur. They're capable of doing what they say they are. At the Series A piece, then everything really starts to focus to the financials, right? So your financial model, if it's good enough, and the company's mature enough, becomes the central diligence and fundraising tool. So if you have a good
Yeah.
financial model, it's got to tie to your actual accounting, right? It can't be this independent thought experiment in Excel. It needs to actually tie back to whatever your QuickBooks or NetSuite or whatever you have is. But that really, the projections become important, not because they're gonna look at
Sure.
do a DCF of the next
Yeah, yeah.
3 years of business and come evaluation. That's not how it works. They want to understand that you have thought out reasonably how you believe the finances of your business will evolve after the investment, right? And if you
Mhm.
show a good financial model, it means you understand your business and you understand how it's going to grow. It's not some finance exercise. It's are you an expert CEO exercise, and do you actually understand how your company will evolve over time? So it becomes a really important tool. Other thing at Series A is, revenue is everything. Revenue, revenue,
Yeah.
revenue. So, cash is number two, revenue is number one at that stage. So if you are, we deal with e-com companies, software companies, health companies. So the revenue is a little different, but we'll take a software example. If it's software, you need to make sure that you have a very tight contract schedule, and you're able
Mhm.
to break down all of the individual pieces of your revenue, how you got them, what your ARR is. And if you tell somebody, I have $3 million of revenue, you should be able to, in your head, go out and say that's 20% of that is made up by X contract or Y
Mhm.
contract, or maybe you're selling
Yeah.
to small medium businesses or even consumers. Then you say 30% is from X type of client, whatever it is. But you really need to have a schedule somewhere that's really clean, tied out to the dollar. And that will make your diligence go much faster. When I was working at the venture fund, um, before Expo Group started, we actually would use that as a filtration process, because when
Right.
you're investing, you're drinking from a fire hose, right? You're trying to find
Mhm.
a good investment. VC's a lot of like a little league soccer game. Everybody's chasing the same couple
Yeah.
companies. you want to try to find a company that maybe hasn't been really seen by other investors and you've uncovered it first. But the number one thing when we were trying to find those companies and we were talking to folks is we might sift through 50 companies and 40 of them would give us, not really be able to produce any financials, or
Right.
the model didn't tie at all to the historical accounting, or the model was really weak. It didn't really make any sense to us. And it was clear that the CEO just wasn't experienced.
Yeah.
That was very easy to push that out. Then you look at someone who's a good CEO, understands their financial model, can walk you through it front to back, understand how their business is going to evolve. Huge indicator of success, big green flag. So that becomes really important at the Series A phase.
Yeah, that's great. Well, this is a fantastic piece of advice there. And you see, it all comes back at the end of the day is being on top of your business, understanding your business, focusing on the fundamentals, having everything in place, and then you can then you become more attractive in conversations with potential investors. So thanks again, Kevin. All of Kevin's information will be below this video. But before we go, remind people what you and your company do.
Yeah, so Kevin Gwynn White, and the company is Expo Group. That's EXB as in boy, O Group. And we're really focused on helping CEOs win in the market by helping their company grow through really good finance operations. It's both CFO, outsourced accounting, or in the fund side, financial due diligence, tax due diligence, and really just bridging sort of that gap between CEOs, especially newer CEOs who are trying to navigate the fundraising scene and sort of our investor network.
Perfect. Well, listen, thanks again, Kevin. Thank you for watching and listening, and I'll see you all again soon. Thank you.
Thanks, John.